If we are at 333, I don't think that will be the point of the single gold silver ratio single. I think it's more likely we'll be in around the 30s at that time. So this is a little bit of Chinese mathematics, if you'll allow. But if we're in and around the 30 level, I would imagine that you'll be around 10,000 when we hit 333. And I would imagine we'd go well beyond that in due course by the time we go single digits. So I do see 4 digits silver and maybe even possibilities of 5. But that will also be, again, about the dollar as much as everything else. And the net effect of those kind of talking is that you could be at 50s, 60,000s in gold by the time that occurs, and maybe more. We don't have something particularly hard and fast. I'll be doing point and figure targeting, which is a different methodology, which is still strong, but not as strong as HVF method targeting. And I'll be sharing those on X later on where I think gold will probably be post a major reset. You've got to remember the dollar may only exist in CBDC form, like a stable coin at that point, and there'll be no more physical cash. It'll have had a timeline. They will have called all the notes in, or they would have been destroyed as worthless. This could follow some banking crash and a lot of other major events of shock and awe to distract us all from this entire rotation out of the old system into some form of CBDC-based surveillance grid, biometric, emphasized type financial prison pen, I would describe. So yeah, would you like to see the chart on gold? And let me show you how I frame it right now. If you would like to see shorter term, how we are seeing the gold, I'll just pull it up and we'll give you the technical take shorter term on that. If I just put on some of our technical draws on here, this is the weekly. So we use quite big time frames. I'm not on the absolute biggest. Again, I was mentioning to you, we always expect 3 waves of selling. Markets typically do this. The first wave would have occurred there when you were almost at 5-6 and you sold off to 4,400. Let's make that structure a little bit bigger because that's kind of a little bit small. Let's focus on the consolidation, not the up move. It's easier to see 3 waves of selling. You're quite clearly shooting star here. This is known as a rejection candle and a potential period of pullback. There's the shooting star. And of course, you went all the way down to the 4-4. So that was $1,200. Then you had a rally, and then you had another harsh sell-off to about 4,098. We then had a grinding rally. We've come up against the channel top here, which we call a capping descending grind line. And this is a basing descending grind line. Together, they make the channel of continuation winding up. So this overall, we suspect, is a continuation pattern, but you take some time to come out of it. I think there's a third sell-off to come. I don't think it'd be as violent as this one or this one in terms of scale and also the momentum, how steep it was down. But you could find that you could drift off, particularly if there's a AI crash or there's an oil price spike, which could force yields up. And of course, the debt markets are very badly set. So initially the yields going up puts pressure on gold and silver. In the longer term, eventually, everyone rotates out of bonds into gold and silver on the basis of fiat and debt debasement. It doesn't matter what yield you're getting. If you're losing all your capital, it's much better to be in gold, even though it doesn't pay a yield. So we've got to go through that cycle, first down, then up. And that's the possibility. So where do you bottom out? Is it 4,100? Is it somewhere here? Could it be a new low to the previous low? Or could you bounce on the midpoint? Sometimes that happens and you come back up. You only have a partial sell-off because the whole idea is the volatility is weakening. And if everyone who wanted a panic sell, you got the shock there. You got the disbelief that led the second rally. Then you got a harsh second selling that says, no, this is for real. And then you've got a weaker rally and then you've got a drift. This should be the weakest point momentum-wise of selling. It should take longer to go less far down. And so where's the low? I don't know, but I'll be buying the turn when we break this capping descending grind line in terms of continuation to the upside. And that's going to be a technical trigger for us. So first down, then strongly up, potentially. On a lower time frame, if I give you the weekly, technically, just so that everybody understands on a lower time frame, we also can do technical analysis. We have a falling wedge structure, and we typically expect waves of 3 in selling. It's not exactly in the middle. We call this the splitter, and it divides that. There's your first major wave of selling. There's your second. And we've had this rejection, a fake attempt to break out that's currently being rejected. So there is possibility for further downside on silver for a bit. It might bounce on the splitter. It could even visit all the way down here. That could be on sell in May and go away. We've got a new Fed who wants to be very dovish, who wants lower rates, wash, which is going to be very inflationary. That's going to see bond yields continue to go up. That's going to keep a bit of pressure on gold and silver when the yields are going up. You could sell off here. But in the longer term, if you're patient, the break here will, in our opinion, come in due course, even after a sell-off, and then we'll be beginning our journey back up. So that's a little bit of a synopsis of silver. No change to our expectations. This was an expected pause period. It feels like a long time because it was January, end of January at the highs. Remember, this is a 3-monthly multi-decade, right the way back to the highs of 1982 and even the bull market before that into 82 pattern. So it's a generation, you know. I don't know when you were born, but this spans my lifespan, you know, from 68 to 82 and all the way through what's happening. So people need to be patient.
Okay. As we see in the previous bull markets, silver hit $50 and pulled back strongly, and even a recent one, silver hit above 100 and pull back even strongly. So what do you think, if silver will hit at $333, then how much it will pull back?
I would expect it to have quite a strong, it's fairly volatile metal. Don't forget, making 333, it's likely to be in a very powerful upside move. So when you have that momentum to the upside, that's absolutely smashing you forward and upside. You're in a blow-off moment. We had a little bit of that here. You know, we were sitting at 49.5. The 50 pullback that we said would happen wasn't that deep. You only went as low as around, let me just check that number, because 50 was a very relevant number you mentioned. I think the low was, what was it, 45? So you went to about 55. The high was 54.48. You went almost to 55, pulled back to 45, little nod of the head, a little tip of the hat to the 50 level, and then next thing you knew, you're at 121. So that was a blow-off move. So we were moving incredibly quickly during this period. And that's typical. You should expect a blow-off and a pullback on that. And your question was around the 333. I would expect a similar finishing event. So whilst 333 was the target, you'll probably smash through that. And you might, who knows, 350, 360, 375, who knows how much more. But then you could have another 40%. You might even have a 50% correction. You could come back to 180, 190 as part of a consolidation.
I've been a silver guy since day one. You know, I've been buying physical silver since 1998. So, you know, that's where my head and my heart is. And it's not, I know I own a bunch of gold too. Don't get me wrong. I'm not putting gold down at all. And as a matter of fact, the gold shares have actually outperformed the silver shares by a huge order of magnitude. And if you want to get, I don't want to get into the topic on this show, but if you want to see something else is being managed, the silver stocks are being managed as well. So, you know, you can turn around, no matter where you look, they're rigging something. I'm still a silver guy, and I'm just trying to find it here in my column. Oh, here it is. Hang on. Okay, you were saying 59 to 1. You know, if right now on a standard ratio, everybody knows the standard silver ratio is 15 to 1. Okay, which would put silver around $300 based on its closing price, maybe 310 or whatever. Okay, and if it was priced at the way it comes out of the ground at, and if you look at the World Gold Council numbers and the Silver Institute numbers, it comes out of the ground at a ratio of 7 ounces of silver for 1 ounce of gold, and that would put the price of silver something north of $650 an ounce. Okay, and silver is much more widely used, and so you can see how much they've suppressed the price. So sooner or later, at some point, a rather impressive triple-digit silver numbers in our future, most likely somewhere between those numbers. And all that remains to be resolved is what that price will be and how soon the powers that be allow it to happen. Its first attempt to reach one of those values back at the end of January was obviously crushed, as were all the rest since then. But in the face of the continuing structural deficit in silver and the move of silver from the west to the east and the other stuff going on in the world today, they can't keep it up forever. Silver and gold, I'll start with silver first, is that, I follow these markets religiously, and at the short position of the 8 largest traders in silver at its high last year on 23rd of June was 86,870 contracts. And as of last Friday, it was down to 44,632. So between that time and last Friday, they've covered 42,000. They've covered 42,000 silver contracts, and that's part of what caused the price to rise. Okay, and the price rose and rose and rose, and then all of a sudden, starting about December 1st, when it went parabolic, that's when the speculators showed up, and they piled on the top of the trade, and away it went to the upside. And of course, if they let it go, we would see a 3-digit silver price right now of an unbelievable number, $300, $400, $500, $600 an ounce. Pick a number, because we would have had a market clearing event of biblical proportions. And in gold, that's why gold rose as much as it did last year. The big 8 shorts in gold covered 88,000 short contracts in the rally that started back at the end of last year, or the beginning of last year. And the rest of all the commercial traders in gold are short gold. So the big 8 covered 88,000 contracts, and the rest of the traders, and there's 38 of those, covered 48,000